So I have the distinct and unique privilege to have a one-on-one discussion with John Πόλσον. John has been a major investor in Greece. He has been a friend of Greece. But above all, John combines what I call industry leadership with thought leadership. So his overall involvement with Greece has been very positive, has been transformative, and it has been a long-standing presence. Last year, we had the opportunity, actually he let us, we had to convince him to allow us to present him with the Capital Link Hellenic Leadership Award, recognizing his commitment and involvement and contribution to Greece. So it is very fitting this year to have a one-on-one with him. And the title of our discussion is called A Seasoned Investor's Perspective. Well, John is seasoned in every sense of the word, but he's also seasoned in terms of his involvement with Greece. So I'd like to welcome him. John, thank you for being with us.
Hey, thank you, Nicholas. It's great to be here again, and I want to thank you for including me in this conference.
Of course, always. So I have, we have 20 minutes. I have 5-6 questions to ask you. I will start with the first one, the most obvious one. You've been among the very first significant investors in Greece, and you have experienced significant changes in Greece and the world during all these years. Based on this experience, what do you think is different today, and where does Greece stand in terms of prospects and outlook? The theme of our conference this year is looking ahead with confidence. Do you agree with this?
Yeah, thank you, Nicholas. You know, Greece, it hasn't been a easy process over the last few years, but from this point forward, I would say I am very confident about Greece's prospects. And the main thing that is different today is that Greece has a pro-growth government under Prime Minister Mitsotakis, who I believe is an exceptional leader. And some of the things that the government has done that are pro-growth are, one, in lowering taxes. We saw the dividend rate come down from 10 to 5%, corporate tax rate from 28 to 24%. But the tax benefits have not only been for the investor class, but also for the lower quartile, when he lowered the marginal rate on income up to 10,000 euros from 22% to 9%. So, you know, these are benefiting all segments of the economy. In addition to taxes, there's been public sector reforms, which encourage investment, all pro-growth policies that will create jobs and increase living standards. So I think the attitude of this government is very encouraging, not only retrospect to Greece, but almost anywhere in the world. Now, we have to admit, everyone got hit by the pandemic. Greece was also hit, and the economy will likely contract by about 10% this year. But with the vaccines now coming, we expect to see a strong bounce back in 2021, especially in tourism by the time that the summer starts. I believe the government has managed well through this crisis and has set the country up for recovery. And one of the positive aspects, as you know, is that we can't forget that the 32 billion of euros that will be coming to Greece as part of the EU Pandemic Response Fund, and that will be a game changer for Greece.
John, thank you very much. Going into the next question, it is a priority for the current government to promote Greece's digital economy. What do you think is the potential there? I mean, the government has put a lot of effort and a lot of emphasis in it.
Yeah, you know, I think that's a very smart strategy on the government's part to turn Greece into a tech sector. I'll give you an example. Over the last 10 years, the US stock market value of new economy companies has increased roughly 10 times more than the old economy companies. So if Greece wants to grow, it's clear it has to focus on the industries of the future rather than the industries of the past. And just to give you an idea, there were two large IPOs in the US last week. One was DoorDash at 70 billion, and the other was Airbnb at 100 billion. And both these companies are under 10 years of age. But each of these companies, based on the IPO price, has a total market, has a market cap greater than the total market capitalization of the Athens Stock Exchange. So the fact is these companies can be started anywhere, and they could also be started in Greece. So I think all the ingredients are in Greece to attract tech investments and propel Greece GDP to new heights. Probably the most important factor that you need is the Greek population is relatively well-educated and entrepreneurial. And now you have a supportive government which can act swiftly with coordinated economic policy. And the positive things, the new democracy government, again under Prime Minister Mitsotakis, has a significant digitalization agenda. So we already see the government taking concrete steps to attract the investment. And the announcement that Microsoft will invest 1 billion euros in Greece to build 3 data centers is significant and proves, that Greece is encouraging and supporting high-tech investments. Greece has also done a couple of other things, programs, which will not only encourage other types of investment, but will also encourage digital workers to relocate or repatriate to Greece through several tax incentive programs. One I find particularly attractive, I wish I could take advantage of it, is the non-dom tax program. So if you've been a non-resident of Greece for 7 of the past 8 years, or have not been a resident of Greece previously, you can apply for non-dom status. And as long as you reside in Greece for over half a year and make a relatively modest investment of $500,000 within 3 years, your global income will face a flat income tax of only 100,000 euros per year for up to 15 years, and no inheritance tax. So, it's an extremely attractive location for wealthy individuals or modestly wealthy individuals to locate to Greece and minimize their global tax situation. They've also introduced something that's kind of unique. It's called the Digital Nomads Tax Program. And that if you are employed and have not been a previous tax resident in Greece, but if you come to Greece now, you can reduce your income tax by 50%. So that encourages people, instead of leaving Greece as they have in the past, the knowledge drain, to encourage people to come to Greece to work and reduce their income taxes at the same time. Last thing I'll mention is the tax treatment of options. If you have options as an encouragement and you convert those options into stock and hold the stock for either 24 months or 36 months, you can reduce your capital gains tax to as low as 5% for newly established companies. So for all these incentives together make Greece a very welcoming place to come back, start new businesses, particularly in the tech sector.
John, this has been an extremely dense, I would say, reply. You really hit every point, and I thank you very much. Before going to the next question, I'd like to say how much I agree with you. Actually, as you may have seen, we had a panel today just on how Greece is becoming the Silicon Valley of Europe, with a lot of the American companies that have already made investments in Greece, as we mentioned, and are intending to do more. And what I find personally very encouraging is the fact that not only the government, with Minister Pierakakis is spearheading the digitization, but also the general population is becoming a lot more high-tech oriented, because with the current living situation, you have to be more using technology. There is no other way. So, but you went down the line on every point. Thank you so much.
Well, you're right. If you want growth, you might as well invest in the fast growing sectors of the economy. And the explosion in technology, it's not only occurring in Silicon Valley, but other areas. There's no reason why Greece can't become a hub for tech investment and growth. And that's what the government's encouraging. I think they'll be successful at it. We already have, plenty of evidence that it is working.
Indeed. So let me go into question number 3. With investments in Alpha Bank and Piraeus Bank, you are one of the largest private investors in the banking and financial services sector in Greece, a sector of key significance for the economy and the country. So what is your perspective in terms of the growth potential, opportunities, and challenges in this important sector?
Yeah, that's a good question, Nicholas. I would say, this has been a tough road for us. I mean, we invested early. Didn't turn out quite as we expected. We invested again, then we got hit with the pandemic. But at this point, we do see the economy recovering, and we do believe investments in the financial sector are some of the most attractive available. I think the pandemic has created some new challenges, but I think the banks appear to be managing those challenges pretty well. The main challenge for the banks is still reducing the non-performing loans from the past at a faster rate than they have been doing that. So as you reduce the NPEs, your provision expense comes down, and then you'd have capital to support growth. So the government came up with the Hercules securitization scheme, and that's proven to be a very useful tool to accelerate the reduction in NPEs. And all of the banks in Greece are going to use the Hercules program to, again, accelerate the NPE reduction. And as the NPE stock comes down, the pre-provision income, which is relatively strong in Greece compared to European peers, that will drop to the bottom line, increase more, resulting in more net income and robust returns on equity. And that will be attractive to all investors. I'll give you an example with Alpha Bank. Alpha Bank is extremely well capitalized. There's a capital ratio of over 18%. And they're already on the path of bringing down the NPEs through the 10 billion Galaxy securitization program. And once it reduces its NPE to a single-digit ratio, then the provision expense will decline significantly, and the resulting return on equity should go to about the 10% range. So the advantage from an investor today, if you look at the average European bank with a similar return profile, trades at around 1x book. But yet Alpha Bank trades at only less than 0.2% of book. So as the NPEs come down, pre-provision expense comes down, net income goes up, return on equity goes up, then the market to book value goes up. And today, trading at 1/5 the multiple of the average European bank shows you why there's so much potential in the banking sector over the next couple of years. So that will continue to be a key area of focus for us, and we're quite bullish on the potential capital appreciation in this sector.
Thank you, John. Very, very optimistic and very realistic, actually, analysis. Now, moving along, you are also a major shareholder in EDAP, the water utility company. There is a big effort to restructure the utility sector in Greece, and that leads me to ask you, in your opinion, what can be done to maximize the growth potential in this sector? After all, it's quite an important sector for society.
Yeah, it's correct. One of the attraction of investing in Greece, you look at the multiple that EDAP trades for, the yield, dividend yield, and then you compare it to the English utilities, and you got as much as 3x upside if EDAP was to trade at similar multiples as its European peers. Now, it turns out EDAP is a well-run company that has a long history of supplying clean, fresh water to Athens. But it's important that Greek utilities like EDAP continue to invest in their networks and use their balance sheets efficiently. So what's lacking what needs to be done is Greece needs to have a modern regulatory regime with an independent regulator and a well-defined allowed rate of return on their regulated asset base. And that's what they're moving towards. And once they come up with the new regulations, and that's why the government is so important in the investment outlook. And if Greece follows the best European practices for European utility regulation, then the public assets will be maintained, and then the valuation should rise to approximate its peers, and that leaves substantial upside for Greek shareholders. And importantly, with EDAP, 61% of the company is owned by the Greek government. So as they make these reforms, not only will the public shareholders benefit, but the Greek government, as the largest shareholder, should benefit as well. And in that sense, both the government and the shareholder interests are, I think, perfectly aligned in this case.
Great analysis, and your analysis exactly of the peer evaluations is particularly relevant. And I think in the past, Greece was penalized from a country risk perspective in terms of attaining those equal peer evaluations, but that's no longer the case because I think Greece today is viewed very differently. Anyway, going into another major topic, corporate governance. There has been a big effort in Greece from the regulatory authorities and the business world to improve corporate governance. This is an area where you're credited with having made a significant and positive contribution. So please share with us your insight on the progress achieved so far and why corporate governance has been important for you as an international investor in Greece.
Yeah, it's absolutely important. And the focus on good corporate governance is appropriate. And without good corporate governance, it's very difficult to invest with confidence. You know, if you're going to invest in a public company as a shareholder, you want to make sure that the governance is appropriate and that you're going to be treated fairly as a shareholder, and there won't be inside benefits to directors or other large shareholders at the detriment of the public shareholders. So if Greece wants to compete for investment capital, it must insist upon strong governance, and the trend in that direction has been very positive. We noted that the authorities are making this a priority, and we welcome it. Now, we've been involved in this important situation in the governance of Piraeus Bank. My partner, Alex Blades, has become a director of the board of Piraeus and has helped recruit, executives of international standing to join the board. So the first thing we did was recruit a new CEO, Christos Megalou, who spent his career as a partner and managing director at Credit Suisse. And then we also recruited a new chairman, George Hangji Nicolaou. He was a PhD in finance from NYU, spent his entire career in the financial sector, including at major banks as well as the IMF. And those are the two most important direct executives. But then we also brought in very accomplished directors, Karen de Bach, who was a former CEO of Dexia. And we got David Hexter, who was a senior executive at Citibank, Arne Berggren, who comes from the IMF, and then Enrico Cucciani, who was the former CEO of the largest bank in Italy, Intesa Sanpaolo. So, we've dramatically strengthened the governance at Piraeus. That should give confidence to investors as well as other public sectors. And we think this is effort, has been worthwhile and is now showing through in very strong operating results. So we're glad to have made this contribution in addition to our financial contribution in Piraeus Bank.
Thank you, John. And that leads me to the last question of our discussion. Unfortunately, our time is limited. We could spend hours together because you have such a rich insight. We have seen a big uptick in terms of foreign investor activity in Greece, with interest and actually with activity spreading among many different sectors. So what is your perspective in terms of which sectors are the most attractive? And without putting you on the spot, if I may ask you, given all this discussion and the positive outlook, are you likely to increase your own investments in Greece?
Yeah, thank you. I think almost assuredly we will be increasing our investments in Greece public securities next year. And we're already planning on that and where we're going to be targeting at the current time. And this interest is not surprising given the confidence we and other investors have in the Mitsotakis administration. And I can't emphasize what a difference it makes to invest in a country where the government makes sound economic policy decisions and welcomes investors. To me, the most direct and liquid way to increase exposure to Greece's economic growth story is through public equities, including bank equities, and this will continue to be our primary area of focus. But another area that's very attractive, I think, for all investors, including Greeks, is the real estate market. And although, after falling through the financial crisis, Greek real estate prices have now started to rise, and they've continued to rise even during the pandemic. And just to show you, what happened in Greece happens all over the world. And by way of comparison, in the U.S. financial crisis, U.S. residential real estate prices fell by 31%, but have risen 63% from the trough. Greece residential prices fell even more, 43%, but they've only risen by 15%. So we think there's a lot more upside in the real estate sector, whether it's an individual home, hotels, tourism assets, or other type of commercial real estate. That as the economy recovers, there'll be continue to be substantial appreciation in the real estate sector, and that's favorable for everyone. Let me just make one last point about investing in public equities. Greece is unique in that the tax rules are extremely favorable for investors, and especially for small investors. I'll give you an example. If you buy public equities in Greece and you own less than 0.5% of the outstanding shares, there is no capital gains tax on the gains. That's a tremendous opportunity. And if you exceed those limits, the capital gains tax rate is only 15%. So, I think there's, looking forward, I think there will be substantial appreciation in the public markets as the economy recovers. And those are available for everyone. And the government tax bite is relatively minimal compared to other countries around the world.
John, thank you very much. Regrettably, we have reached the end of our time. It has been, as expected, a particularly insightful discussion. I can imagine the headlines that will be generated from our discussion and from your statements. But, I place significant value in what you say because you have voted with your investment. You have been there for the long term. And thank you for being a friend of Greece. Thank you for being a very significant investor in Greece. And of course, tremendously thanks for having this interview.
Okay, Nicholas. Thanks again for having me this year.
Of course.
Take care now.
Thank you. I look forward to next year in person.
Perfect. Take it easy now. Bye-bye.